Hello, everybody. Welcome. We are live and we are talking about alternative assets today. Now, what is an alternative asset? Now, if you remember for the 90s, if you grew up like me, alternative meant kind of like punk rock, kind of like pop, kind of like rock and roll. Well, alternative assets are a little bit different. In fact, the term alternative assets is kind of weird if you ask me, because these are traditional assets, stuff you can touch, stuff that you can hold, stuff that you can use all the time. These are tangible, real assets, but for some reason they're labeled alternative assets, probably because the people that want you to think that these are alternatives want you to invest in Wall Street items, 401ks, mutual funds, things like that, because they get more commissions, fees, all that kind of stuff involved with that. But I don't mean to belabor on that. Everyone's trying their best at this kind of stuff, so I'm not trying to pick on anybody here. We're going to talk about alternative assets today. And my name is Chris Schweigel. I am the CEO and founder of Chris Connects. We are a real estate investing company on a mission to help 1 million people boost their financial health. So why the heck would we talk about alternative assets in the first place? Well, I read 3 more articles this morning. 3 of the 5 news articles I read this morning were talking about layoffs. Meta is laying off people. Amazon is laying off people. What was the other one that I read? Oh, Disney. Disney is laying off people. So this is a sign of a recession when layoffs are happening. One of the advantages about working for a great, big, huge company like Disney or Amazon or Meta is that you have some security in working for a very large corporation. Unfortunately, that security arrangement, that security kind of expectation is not being met. And that's terrible. I feel awful for the people who are being laid off. No one likes to be rejected. No one likes to lose their paycheck. That's a tough situation for people. Now, for the rest of us, how can we look at these headlines and help ourselves? How can we position where we're at, reading the tea leaves, reading the macroeconomic trends, and figure out how we can best survive? Because that's what happens when we start to be fearful. We start to think about survival. And I'm reminded of Warren Buffett, who said, when other people are scared, you should be greedy. And when other people are greedy, you should be scared. Right now, people are generally scared about investing, which is a perfect time, if you have the emotional fortitude and grit, a perfect time to start to be a little greedy. Now, I don't like to say the word greedy, but maybe we could say opportunistic. That might be a better way to put it. Maybe we could talk about ways that you could find opportunities in the market that weren't otherwise going to be there. And I'll talk about 6 asset classes that were discussed at a syndication meetup that I was at this weekend. So first of all, we're going to talk about assisted living. I don't think it's any sort of, it's not any sort of secret that people are getting older. There's 3 million assisted living beds short in the United States. And baby boomers haven't even started to reach that age of needing assistance. So the demographics are inevitable. Healthcare is a driver in every single MSA in the country. The writing is on the wall that assisted living is a fantastic place to go. Another one, multifamily. Now, this is talking about apartment buildings. This is a fantastic class to be in, as fewer and fewer people can afford to live in their own homes. As that affordability gap gains, it's terrible for America and it's terrible for the American people. What it's good for is for people who own multifamily large apartment complexes. Additionally, there's a bunch of bridge loan debts that are coming up new or will be in default soon. Generally, when you buy a large apartment building, you're going to do some renovations so that the place is better and nicer, attracts different people, and you can raise rents, which raises the value of the property, refinance that into long-term debt. And people use what's called a bridge debt to get there. Imagine a bridge you get from one side to the other. A bridge is something that allows you to go from not owning the property to owning it for a short period of time with a high interest short-term debt so that you can do the rehabs and then refinance into long-term debt. Well, a lot of those bridge loans are due and interest rates have gone up, which means cap rates have gone up, which means the price of that apartment building has gone down. So there's a big opportunity here coming up in the next 3, 6, 9, 12 months to start buying apartment buildings. And when people downsize from, a large unit, maybe a 3-unit apartment to a 2-unit apartment, or 2-bedroom apartment to a 1-bedroom apartment, or from a house to a townhouse or whatever that might be, due to the affordability crunch, people still want to keep their stuff. So what do people do? They use self-storage. Self-storage is a really hot alternative asset right now. So you may want to consider thinking about getting into an investment where it's recession resistant. That's hard to say. So it's recession resistant, meaning it does well when times are tough for people because no one wants to lose their stuff, right? Another one is oil, gas, carbon recapture. These are natural resources and energy sector investments that you can make. There is a large energy need right now due to the whole worldwide war, Russia, all that kind of stuff, OPEC. Things are unstable. So finding oil and gas here in the United States and adapting carbon recapture, which is a way that you take the carbon that's released during the oil drilling, put it back into the earth. It's a green energy source and it's a way to help the environment. But get this, the government came out and said where they want you to invest your money. And the way they say where you should be investing your money is with tax breaks, credits, and deductions. The Biden administration has redone the tax code to say, hey, if you are getting into greenhouse gas elimination, if you are getting into green energy, we will pay you to make that investment. These investments are especially attractive for people who earn a lot of money at a W-2 job. I'm talking like doctors, attorneys, engineers, people like that might be attracted to this versus some of these other alternative assets because there's an opportunity there. And again, I'm not a tax person here, but I've been seeing this and using this and doing this kind of stuff that you can make an investment into green energy and that counts against your active income. So it essentially lowers your W-2 earned income for that year. Pretty exciting stuff. Next, I want to talk about short-term rentals. A lot of people are getting into short-term rentals as the demand spiked during COVID. So what happened as a response? Of course, everyone wanted to get in on it. It's relatively easy to do to rent out your place. I mean, I could clear out all this stuff and put it on the market tomorrow, right? And see if I got any hits. Now, here's the state of short-term rentals right now. There's high supply, demand is high, but the supply is outstripping the demand. So on face value, it seems like this isn't a lucrative opportunity, but there's more. I found out that about 90% of homes that are on Airbnb are owners of 1 or 2 Airbnb homes. Meaning there's a lot of mom and pop small investors who are on the platform, not a lot of businesses or institutional people who are on the platform. What this means is as people find it tough to do, as people get burned out from operating this or meeting and greeting people, all the time and haven't created a proper business with a team and standard operating procedures and policies and all this kind of stuff around it, they will likely get landlord burnout and want to sell or get out. So there's a real opportunity here to get involved with a large team or someone who's been doing this for a long time and has a system set up in place so that they can scale and accommodate many, many guests in a night. The last one I want to talk about is maybe something that you don't think about as an asset at all. That's ATM machines. And this is interesting. I never really thought about investing in ATM machines, but at the Secrets of Successful Syndication, which I was at, there are a couple people there who invest in ATM machines. And apparently, when times are tough, people are required to get cash out. It's a nice opportunity to offer them the service of being able to get their cash without going to the bank. It's also might be a lucrative investment for yourself. So there are 6 alternative assets to consider when you're thinking about what to do with any sort of proceeds you're taking out of Wall Street or the stock market or a 401k or just cash that you have on hand that you're waiting to deploy. This is a really, really, really good time to get involved with tangible, real assets. That's what I got for this week, and we will see you next week. I'm going to try really hard to do some stuff to try to get rid of this lag and stuff that we're experiencing, because that is no fun. But until then, hey, we're all learning, right? I am Chris Schwegel, CEO, founder of Chris Connects. Take care.